My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. My friends, I'm just trying to make a little money. My job is not just to entertain, but to educate, put in context. Call me, 1-800-743-CNBC. Tweet me at Jim Cramer. Today, I'm going to try out a new theory. When everything's finally got tariffs on it, I think the market will be up a great deal. Because the last few of our trading partners buy anything from us anyway, so they can't really retaliate. Yep, I'm thinking it may be starting to dawn on people that President Trump is trying to do the right thing on trade. It's just that he's approaching the issue with such rancor and flippancy that it's gotten too nasty for the average American to understand. Now, though, as we adjust, bargains are being revealed, being created by a trade war that few understand, which is how I think we had a decent day. Dow dipped 83 points, the S&P advanced 0.49%, and the Nasdaq gained 1.22%. The perception right now is that Trump's tariffs will drive us into recession because our trading partners will shut down American exports, clubbing entire industries that we have, causing widespread layoffs. The reality, sadly, is that we don't export enough stuff to truly be hurt by the reciprocal tariffs. It used to be a big deal when the Europeans slapped the tariff on Jack Daniels, which, even though it's made in Tennessee, is owned by Brown-Forman, which is based in Kentucky. That was a big deal because when Kentucky's own senator was a powerful majority leader, it meant something. Now it's a pathetic gambit because sales are going down for brown liquors anyway, and the Senate majority leader is from South Dakota. Look, I've never been a true believer in the gospel of free trade. You know that. Our trading partners are always trying to get over on us, so I got zero objections to getting one over on them. But the president's rolled out this policy in an ill-advised way, creating a ridiculous amount of angst among our own people. Now, there's this old-fashioned notion that we could have new industrial smokestack plants coming here, or your goods or be prohibitively taxed. All this could have been done, I think, in a quiet way, like it was done with Mexico, where the president actually got what he wanted. And Mexico is tricky because they actually buy stuff from us. So the question is, can the market truly rally now that we've gotten used to these tariff-induced nervous breakdowns? Can we ignore them yet? Since we aren't going to get anyone to open their markets to our goods anyway, and we are, indeed, largely a service economy. I don't think it's going to be all that easy, but I will say this. If the president were to patiently explain to the American people that other countries abuse us, dump their goods on us, and then show, again, dispassionately, how shabbily we're treated, I do think the whole policy would be a lot more popular. Sadly, that doesn't seem to be the Trump way, so somehow this whole fight turns into building some aluminum plants here, even though they're bad for the environment and expensive to run, while our trading partners try to crush Brown-Forman stock and are doing a good job of it. Yes, I'm minimizing the actual tariff concerns here, but for decades our government sold out American people, American jobs, so that we could get our hands on cheap stuff made overseas. That was the bargain. And to be fair, Americans love cheap stuff. Trump wants to reverse this dynamic, but he never explains it that way. Instead, he makes it all personal and handles it in the most peculiar way. Hey, 25 this, 50 that. And it's driving people crazy, causing regular, hardworking Americans to pull in their spending and worry about their jobs. And believe me, they are pulling in their spending rather quickly because the White House has us needlessly frightened. Today, though, we saw what happens when the president speaks a little softer, carries a big stick, rather than screaming loudly and clubbing the Canadians, who are generally pretty nice, come to think of it. Most Americans can't figure out what Canada did wrong. Now, we thought the 51st state thing line, that was kind of funny initially. Nobody likes it anymore. Not a laugh line. Time to drop that. So let's go back to the stock market for a second. We had a lot of things go right today. First, the consumer price index came in softer than expected. Most of the components that were overheated are actually going down, by the way. That means the Federal Reserve has room to cut interest rates. Second, the Fed may have to cut. Because of all this hand-wringing geopolitical stuff about trade, people aren't spending as much as they used to, which means most retailers are going to miss their earnings estimates or give a weak forecast. Bad for them, but more rate cuts will be good for the market as a whole. Third, it turns out the reason why we like tech is because we dominate in tech. And unlike everything else we make, the rest of the world can't do much about it. Although Europeans try to tax out our companies constantly. Trump's trying to stop that, too, but everyone ignored it when it was announced. Now, because of the smokescreen of Canada's electricity surcharge, we forgot what we like. Companies that actually do dominate the world are tech companies, and we started buying them again. Fourth, we're most likely not going to get into a serious recession because the Fed can take action to prevent that. And even if the Fed does nothing, the market can recover once all this tariff stuff is behind us, and it will be behind us at some point. So it looks like all the buying of those recession-proof stocks that's been going on, the J&Js, the Proctors, the Cloroxes, seems to have run its course. When those stocks ran, the industrials all got clocked. We see today that the inverse is true, too. Money's falling right back into the stocks and can do well in a decent economy. Now, I know the president said, I quote, what I have done, quote, what I have to do is build a strong country. You can't really watch the stock market, end quote. Today's positive action implied that Wall Street may be thinking maybe we don't have to watch the White House. Of course, there were some stupid things that happened today. The momentum meme stocks, the Palanters, the Apple-Lovins, and yes, sadly, the Nvidias all went higher, as did so many stocks of companies that make no money whatsoever. The ones that are just about nuclear energy or space or time travel, I don't know. Boy, it was great to see the air come out of some of those for the last couple of days, but they're back. The retail stocks, which are hostage to rancors talk about aluminum and rebar, are still cascading lower, though. And there's a sense of manufactured unease here that's incredible versus, say, France, Germany, Spain, Sweden, Switzerland. Their stock markets are so far ahead of us that I'm getting embarrassed. The Europeans are running circles around us for the first time in 15 years. We should be ashamed of ourselves. Maybe we're too focused on rebar and aluminum cans. Oh, and can we please stop talking about William McKinley? I mean, put him on a new $200 bill. Forget about him, okay? We're talking about the guy in the 10. He was the first pro-tariff leader. Does Trump really want to be the second coming of Alexander Hamilton? Kind of a cool guy, but, you know, didn't work out. Listen, I know we're not out of the tariff woods. The president won't let that happen, even though he could make a lot more progress by going about things quietly, like he did with the great success that was Mexico. But I do know that nearly everyone on Wall Street thought Trump would be a champion of American business. Now I feel that only Elon Musk, the richest man in the world, is having any fun. Everyone else is just scared, not spending. Bottom line, in the end, we'll probably need Fed Chief Jay Powell to save us, even as that's probably the last thing he wants to do. Hey, let's go to Forrest in North Carolina, please. Forrest.
Yes, hi, Jim.
Forrest, what's going on?
Everything's going well, man. Just got off the golf course, and it's a beautiful day here in North Carolina. I'll tell you that.
Hey, Dom Chu is doing some great golf stuff today. A lot of people like golf. I got to get more into it. You know, Ben Stoto is our chief scientist and research director. He's like the #1 golfer in the whole world.
I just recently retired. And so
lucky man.
I get to play a lot. Yeah. So, been listening to you, watching you on TV since Kudlow and Cramer back in the 90s, man. I lived in California.
Holy cow! Which one of us went to work for the president? It's a quiz.
So I was going to ask you about ExxonMobil. What do you think? It's got a decent dividend.
I like Chevron better. You got Mike Wirtz doing something. The stock hasn't moved nearly as much as ExxonMobil, and it's Chevron's time because of that 4.4% yield. Hey, why don't we go out? Thank you for those comments. Let's go to Andy in Indiana. Andy.
Booyah, Jim. How we doing?
Booyah, Andy.
Hey, long-time listener, first-time caller, buddy.
Oh, fantastic.
Thanks for taking my call. I have stock.
Oh, no problem.
I have stock in Amazon, and which I've had it since I've had it. It's been up.
Okay, let me give you a preview of tomorrow's show. I'm doing my 12 o'clock show for club members, and I'm saying the Amazon is my favorite stock of what used to be the Mag 7 before they broke up that gang. This is the equivalent of Yul Brynner from the movie. I don't know if people remember Yul. He was so cool. It's incredible. Only Steve McQueen was cooler. Okay, let's go to Chuck in North Carolina. Chuck.
Booyah, Jim.
Booyah, Chuck.
Thanks for taking my call. Calling from Durham, North Carolina. Nice 80-plus degree weather today, my friend.
So beautiful, Durham. I like Winston-Salem, too. Rose City. I know that stuff.
Hey,
what's up?
There you go. Hey, I'm looking for a growth dividend play. I have a small position in Verizon. I wonder what your views are.
I want you to keep that position small because it's terrible. Sorry. It's true. I took a picture of a Verizon store last night and posted it on X. Verizon is not the stock. It's not the stock it used to be. AT&T is the stock it used to be, but Verizon's not. Verizon switched with AT&T. It was like a man with two brains and now there's one brain, and the brain you want is AT&T, not Verizon. All right, I think eventually, I don't want this to happen, but Fed Chief Powell may have to swoop in and save us. Even though I know that's not what he wants to hear, it's just that too many people got scared. We're Mad Money tonight. Travel's been triumphant, but after pulling back this year, I'm sharing the stocks that I think could keep sailing and the names that might not be clear for takeoff. Then I'm seeing if the sell-off in sports betting stocks could be worth gambling on. And Cloudflare, symbol NET, rang the closing bell today on the heels of its investor day. I'm digging into one of the greatest stocks that we've come across, so stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.